He needs a pro. Okay. All right. Good morning, everyone. Let's get going here. All right. Last night's session on U.S. markets were kind of a seesaw action. We saw markets push higher in the beginning of the session, kind of on the back of on the Pfizer AstraZeneca talk and Roper Industries earning beat, and the next thing you know, B of A came out and declaring a miscalculation on their capital numbers. And somewhere around that time, we really just started to see the Nasdaq really get heavy again, and just really drive the sell-off down. At one point, when I looked last night, pretty much every technology stock that you can think of was down close to 5%, really getting beat up hard. And then, just out of nowhere, we had a massive reversal toward the end of the day. We did have a pending home sales number, which rose 3.4% in March. And we also saw we had a huge beat out of the Dallas Fed manufacturing number. So, but really, the catalyst for the turnaround, I'm not really sure. It's kind of the second time in maybe 2.5 weeks where we've seen this big reversal in at the end of the day, especially in technology shares. And probably just somebody coming in looking to catch them at oversold levels. Not really sure what the catalyst was for the turnaround, but interesting to see how it plays out. In Asia, we didn't see any follow through again on the turnaround and the bounce in the States. Really, the Nikkei was closed, but all the other markets finished the day in the red. The Hang Seng actually, as we speak, has just creeped back into positive territory. But we saw Sydney was actually down over 1%, led lower on mining prices, specifically Newcrest mining, and we saw iron ore prices, which kind of hit a 7-week low. So we saw the likes of Billy's and Rio and things like that coming off. The Hang Seng was weighed down by China Petroleum and Chemical Corp, which missed earnings expectations, as well as some of the casino stocks. They're saying that the average profit per table were down in China over the last quarter, and I think just kind of little sneak peeks of data that continue to be worse across the board in China, which obviously taking us lower and bringing more doubt into the forecast for China. We also saw the property developers in China. Some of them were limit down. I know Jimdale was, I think, down 10% limit down on the day. Vanke, which is the biggest property company, also releasing earnings down more modestly than Jimdale, but still down quite a bit. Revenues really down a lot, and so seeing property market stocks come off a lot, and probably a big cause for the drive and prices lower for iron ore. All right. Interesting little statistics here. We're kind of seeing bull markets since 1966, and the measurement of the length of runs. We saw a chart similar to this the other day in terms of the time period. This also has a time period on it. You can see number of months at 61. Most of them tend to run. I mean, there's only been one that's run longer than 65 months, going all the way back to 1966. That, as you can see, was the 1990 to 2000 period. That was 115 months, and that was the biggest return as well at 417%. So we're getting closer to the top end of the band in terms of returns, and the length of months and in the expansion periods of bull markets since 1966. This is an interesting statistic and something to think about going forward, because we have been running a hell of a hard for a long time now. Another interesting one here is just it's a comparison of the sectors in the states. And you can see it's very similar probably to what our markets really looked like, and this is only going back to March. But the divergence has been absolutely incredible there. It's also been incredible here. So, I think it's really important to take note of this and just kind of highlights the fact that when you start to see these sector rotations, I mean, they can really, really go for extended periods of time and really make massive divergence when the timing's right. All right, so very light on corporate action today in the States. We've got Bristol Myers Squibb, we've got Merck, and we've got Express Scripts Holding Company. So not a whole lot to pay attention to there today. But there is a lot of data out this week. We've got so today we've got German consumer confidence, we've got French consumer confidence, we've got unemployment rate in Spain, retail sales out of Italy, money supply out of Europe. GDP numbers in the UK, business confidence in Italy, consumer confidence in the Eurozone, CPI numbers in Germany, and consumer confidence in the States. So this is going to be a data-heavy week, so we'll continue to watch that going forward. I think we've got the Fed that's out tomorrow going to be speaking. That one's probably going to be interesting. We're starting to see precious metals, which are starting to creep down a little bit, maybe on the back of continued better than expected data, as we saw last night. We had gold price kind of above 1,300 going into yesterday's session. Another set of good data takes us a little bit lower on precious metals again. And the next Fed speak is going to be really, really key toward that. So we'll continue to give you feedback on that as we see it going forward. All right, let's jump into the maps. All right, the first thing we're going to look at here is AngloGold. AngloGold, these stocks, the gold shares had a huge rally on Friday and really on no move out of the gold price. I personally have been caught quite on the wrong side of this, so maybe I'm a little bit biased, but bottom line is here, we definitely have a bit of a head and shoulder setup. So technically the setup was quite bearish. You can see there, right shoulder. We're really kind of coming up to test the right shoulder, and as yesterday's closing price in the States puts us at about 194.5, which is very close to where the resistance line is here. So we're going to look for about 194 and a half as our right shoulder here. If we break up above that, then I think that would really kind of negate this head and shoulder pattern. So watch that level closely today. All the gold stocks really look similar to this, so I'm not going to show all of them, but just keep that in mind. Discovery, which we did talk about a few sessions ago, when it broke out here to new closing highs, but before Friday we saw two sessions where we were very wicky back and forth, kind of closed right at this resistance level at around 89.50, and then finally on Friday we really saw a punch through. I think a target we're going to be looking for here is closer to $93 out of Discovery in the next few sessions. SA Breweries. This is a local chart, so I'm showing you this from Friday, and it's a pity that we were closed yesterday, because this was the definitive breakout we were really looking for. We got it. We did get the punch up a little bit on Friday, pushing away from resistance. So you kind of had some sort of confidence that was the time to go for it. And then yesterday we were closed. We got another 1.8% out of London. So now London really kind of tacking it on. We're going to have a big open this morning, showing about 568 on the closing price from yesterday in London. All right, FirstRand. I'll just show a couple of the banks here to close it up. I mean, the banks went absolutely crazy on Friday after kind of looking pretty soft the previous few sessions, and out of a continuation pattern. This thing's definitely looking at a target probably closer to 41.50, just on the move out of this continuation pattern, and been totally indestructible, the bank, as of late. So if you look at Nedbank, I mean, Nedbank went totally nuts on Friday's session, breaking out of this little wedge pattern, this little triangle. We pushed higher dramatically higher, obviously, but also taking out all-time highs on a closing basis, on an intraday and on a closing basis. So I don't know that there's a whole lot left on the move to the upside here. Maybe a few bucks left out of this, technically, but bottom line is huge move to the upside, and I think that some of these other banks are looking under-owned, maybe over-shorted, and maybe have some of the same type moves coming. That's it for today, guys. Thanks a lot.
I reckon these futures are going, didn't know anything, huh?